Adobe stock seems to have finished crashing as it got after its earnings. I am seeing a very interesting opportunity for both long-term and short-term investors. So whether you're a beginner and you don't know anything about the stock market, or you're a swing trader or a long-term investor, this video is for you. I'm going to be talking about the opportunity in Adobe. Is it a buy? Is it a short? And where to buy or where to short if these are the cases. And I'm going to be doing it in a very easy and understandable way. This channel is dedicated to swing traders. Swing traders normally hold positions anywhere from a week to about 3 months, however long it takes. First thing that we have to do is to look at the stock. What is the return on equity? Anything above 17% is great. Here we have 35. What are the earnings per share? You want to see something above 30% for the last 4 quarters. And here we can see that the last 4 quarters, Adobe's earnings have not been that great. It is a mediocre stock, but it could also be undervalued despite that it is a mediocre stock. And what is the revenue? Good revenues are something above 15% average for the last 4 quarters, or the last 2 quarters should have something like 20%. And Adobe does not seem to have that. It actually has just 10% growth, so it is not growing as much. Adobe is no longer a growth stock. It has stagnated in its growth. Second thing is that we have to look at the industry. Which industry is Adobe in? If the industry is moving up, then it's a good time for swing traders to go in. If we can see here, Adobe industry is actually on the uptrend. That is a very good thing. And I'm also seeing a sneaky sign here, which is fake out, and then it's likely to go up soon. So this is like a double base. Goes down here, comes here, makes a lower low, and then goes up. This is a good sign for the industry that Adobe is in. So now we go back to the stock. Let's put the monthly chart here. This is the monthly chart of Adobe, and let's put the weekly chart here. I'm going to show you something interesting that I found. The first thing is to look at the price action. You can see that Adobe stock went down, right? But the relative strength indicator also went down, which is a bad thing. But then this indicator, which is a composite, the composite is a relative strength indicator, but it is not normalized. So the relative strength indicator is forced to stay between 0 and 100. And that means that it fails to pick up some signals. So what we normally use is an unnormalized indicator, which has no limit to how far it can go. So we can see here that the price goes down and the composite actually goes up. And then we can see that it even diverges above the moving average. Here I use a 13-day and a 33-day moving average. So whenever it's green, that means that the 13-day moving average of the composite is above the 33. And when it's red, it is below. So here we can see that it did a divergence above one of the moving averages. And this is a very strong signal. On the weekly chart, the volume is looking great. The day when it did the divergence, it jumped up on very huge volume. That means that institutions are buying this thing. After that, we go back to the daily chart. The industry is looking good. Here we shall put the weekly chart, which is 4-day chart. And here we put the daily chart. So we can see that Adobe gapped up on earnings. But then after the earnings, this is the earnings day, it then crashed, and then now it is trying to recover. And this is a very strong signal where the stock fails on earnings, fakes out some people, and then comes and closes above the opening day of the earnings. So this is a very good buy, and it has very small risk and a huge potential gain. So to try to find where our stock is likely to go, we get the average true range of the day before the earnings, which is 11. So here we can see average true range 1.5 times the average true range of the last 14 days. 11 times 1.5 is 17, so we can put about 17 here. This is our price projection. And I figured out that it normally moves 5 to 7 times from this price. Since it has been sitting down for a long time and this stock is really beaten down, I would say 5 is the first target, and then the second target is 7. There's a very strong resistance here that it has to fight, so that is a level to watch out as the stock moves. But this is how I would enter if I wanted to buy Adobe as a swing trader right now, because industry is great, earnings are okay, not that great, but industry is the biggest indicator. We can even see that on the red day, there was huge volume, but it actually closed in the upper half of the candle. And it is showing some strong price action. So put a 2% stop around here. 5 would be a stop, 518.9. And then my first target would be here. So if you put in $1,000, you're likely to lose $22, and then you're going to make $180. If you put in $10,000, risk about $200 to make around $2,000. So this is the first target, like I showed you. And then the second target was around here. This is the way that you can profit from this Adobe stock. I would say it's a buy for both a long-term player and a short-term player, because we're seeing that investors are piling themselves into this stock. If it crashes down, that means that the move has been considered wrong, but that's okay because we have a very tight stop. Because if you have $10,000 account and you use $1,000 and you risk only $20 of your 10,000, that is not a bad loss. Come on, man, don't be so stingy. And your profit is likely to be way bigger. So if you like this video, there are free stock lessons where I really go deep into how to play these earnings. Check out that video on my channel. If you like this free content and education, subscribe to the channel for more analysis like this. Also sign up for my newsletter where I'll be sharing stocks that are likely to move up and free stock education from my knowledge of reading over 100 books in the stock market, and also 4 years of experience that I'm sure you'll find meaningful. Thank you, and may the markets be with you.